Thanks a lot, thanks a lot, Cian Corla. Well, we're 13 years now from the 2007-2008 crisis, a crisis for which people paid a huge price and which the banks, private banking, was at the very centre of in Ireland, as indeed around the world. But it seems almost no fundamental lessons have been learned, because what happened in the aftermath of that crisis was, as well as the massive austerity heaped onto ordinary working class people, was bailouts of the banks, the nationalisation of the banks in order to save them. And since then, we've been on a road back to private ownership of the banking system, bit by bit by bit, restore them to profitability, and then put them back into private hands. And we go back in a circle in not precisely the same way, but many aspects of the same thing, back to where we were. And indeed, we have a banking sector that is, increasingly reflects or seen to be an oligopoly, with three main banks who absolutely dominate it, and all of them obviously 100% operating on the basis of profit maximization. And that is, the very, very basic point from a socialist point of view is that private banking doesn't work. It works for the private bondholders while they're making profits, but it doesn't work for the workers of the banks. It doesn't work for ordinary people who want, for example, to be able to access banking services in their local communities. And it doesn't work from the point of view of society as a whole, and from an overall view of the economy as a whole, from the point of view of ordinary people. They will pursue their own profit, regardless of the expense for the workers, for communities, for society and the economy at large, and regardless of the consequences. And that's obviously what we saw in terms of 13, 14 years ago, and it's what we will see again. The alternative is very simple. It's that we should have the banking sector should be in public ownership, should be nationalised, should be run democratically, and should be run as a public utility. So the idea that instead of running large parts of the economy as a service for the banks, we should run the banks as a democratically owned public utility in the service of the economy as a whole and in the service of society as a whole. And if you take some of the arguments that are given as to why we need private ownership of banks and so on, and have them so important and so on, the argument's often made that, well, banks, they advance credit, for example, to small and medium enterprises. But the figures, when you look at them, are striking in how little credit has been advanced to SMEs in the last year, for example. It's at 4.1 billion, a decrease in the last year of 1.3 billion, fallen by almost 25%, the largest annual decline since records began. If you look at where is the lending actually going, the vast majority of it is going to large enterprises, and then a portion is going to SMEs, but the majority of that, so that's not included in the 4.1 billion, is property related. So they're still just financing property. And it points to the fact that private banking is not playing much of a role in terms of productive investment in the economy, but is still mainly focused on property investment, even if it's cut back largely to its traditional core business of residential property, residential mortgage lending, i.e. fleecing workers trying to buy a home. And there is a point about, one of the points I kind of referred to earlier about how banking has changed to some degree, is in relation to the commercial property side, where a large element of the crisis here in 2007, 2008 was caused by a small cartel of developers defaulting on large speculative commercial property loans after property prices rose so high that the property bubble burst, leading to the collapse of all the main banks. And that was really a central activity of the banks, was commercial property at that point in time. Without regulation then, the banks kept lending and lending bigger mortgage amounts to ordinary people to make bigger profits on the interest as house prices lost all connection to wages. But what happened first was the defaults on commercial property. And after that came ordinary people defaulting on their mortgages as a result of the ensuing collapse of the economy, due to the impact of the state bailing out the banks to pay for the property bubble and commercial property market collapse, which came in the aftermath, and then the austerity and slashing of public spending to compensate, to mean that they were effectively bailed out, and then the massive job losses and so on that went with it. But something interesting that has changed in the property market is the shift to vulture funds. So the majority of commercial property is no longer funded by the private banking sector. Instead, the government, quite consciously, rolled out the red carpet to vulture funds so that they would lend to developers instead, and therefore the state would not be on the hook for losses. But in terms of the supposedly fundamental aspects of the banks, and when in reality that is what was fundamental, but in terms of actually providing credit to small businesses, to ordinary people, etc., there's not much of it happening. In reality, the vast majority of it is still just related to property, either the building of property in terms of businesses or in terms of mortgages. And no matter how the rules of the capitalist casino are rejigged after each disastrous new crisis, the house always wins. This time it's US vulture funds and corporate landlords. Last time it was Irish bankers and property developers and small-time Irish rack renters. That's why we need a fundamentally different system.